Please do not get in my way. You cannot drive in my lane. Tires is burning the pain. You don't have nothing to say. This is how legends are made. I know I got what it takes. And I'm not pumping the brakes. And I'm not pumping the brakes. I'm too competitive. I like the narrative. I don't know best in the league. Who you comparing with? That isn't fed them. Top of the throne, it is me. How you moving so when it's speed? I just been bringing the heat. I just been bringing the fire. Bringing the fire. I just been bringing the. And they can't stop me. They know that I'm bringing the. I got the fuel in my veins. Trust me, I'm making a name. We are not one and the same. I am on top of the game. I cut out the line on my brakes, and that's why the drive is insane. Heart of a champ, adrenaline rushes is numbing the pain. I'm too competitive, I like the narrative. I don't know best in the league. Who you comparing with? That isn't fed them. Top of the throne, it is me. How you moving so when it's speed? I just been bringing the heat. I just been bringing the fire. Been bringing the fire. I just been bringing the fire. And they can't stop me. They know that I'm bringing the. They thought I was underdog. I did not fear, not one of y'all.
Just making you aware, haven't seen any official confirmation from any official bodies, but there is a piece in Israeli News N12 suggesting, according to the Atomic Energy Organization of Iran, that radioactive leak has been detected inside the Natanz nuclear facility. Again, these reports doing the rounds, getting quite a lot of attention on social media. Reports of a radioactive leak detected inside the Natanz nuclear facility being picked up by N12, and they're actually citing the Atomic Energy Organization of Iran.
All right, what's up, everybody? So we're going to talk about this because I'm seeing a few things that's a little bit weird across the markets. Naturally, we had a gap down on the SPX on the cash market. It looks like yesterday's close was 60, 45, 25, which came in real close to the high month close, which was a resistance level that we talked about last week. And then today we opened, I can't see because it's on the big monitor up top, 6,000 points exactly. So we did have a gap down by 40 points, which, considering, one would assume that that would be a lot worse, right? Because we did have Israel starting to bomb Iran, which is a whole new escalation of stuff. So let's switch charts real quick, because this is I was just making a thumbnail. That's not the chart I want to look at. I want to look at this chart right here. There's some things going on here that I don't necessarily like. For instance, if we were going to see the market sell off hard, I mean, Bitcoin has been selling off hard all week. I'm not going to cherry coat it, but today things are doing a little bit, things are doing different stuff. Like, let's go look at oil, because it spiked up real big yesterday. See, I'm thinking that Bitcoin was starting to sell off this week because of troop movements. So we knew that they were moving troops. So we gapped up on oil. We're up 5.3% right now, but it's losing steam. You're retesting the yearly opening range. All right, let's go on over here to the daily. Now, obviously, this thing is massively overbought, and I don't suggest anybody sell it, because it's extremely volatile. But we did liquidate this April swing high back here. So oil can go right back into its range if it wants to.
Just on the ags front, China has approved some new US pork and poultry plants to export.
I don't care about pork and poultry plants, bro. Anyways, listen to what I'm trying to say real fast. I'm not trying to get y'all bulled up in a scenario where you should probably have at least some risk mitigated. But what I'm basically trying to say is we're not seeing the yen skyrocket. So basically we're seeing, let's go over here and look real quick. I'll show you what we're seeing. So here's all of your intraday price action. Tesla opened up lower, but is moving up. It's not getting crushed. Apple got crushed at the open for the first hour. And then Microsoft had a nice up spike at the first hour, then gave it back and is now retesting intraday VWAPs. And Nvidia is down a little bit. That counts for your down day up here on the ES futures. Like, this is your futures market on the ES. This tracks the entire gap down. But look where you are. Like, we're not continuously making fresh daily lows after fresh daily lows like we would typically want to see in a very bearish market. If you look over here, right here, this is a Japanese yen futures, and it's this front month contract. This thing should be going up for this bearishness that we're seeing across the board, right? This doesn't look good. Like, why did it retrace the entire move? We had the big sell-off yesterday on Bitcoin at roughly 8 p.m. at the new daily candle open, right here. Here's your new daily candle open. That's 8 o'clock p.m. for me. Let me go back over here. Right here is that candle. The majority of this daily range happened yesterday, last night. I asked Grok what time the bombs went off. It said 3 a.m. my time. Now, how did Bitcoin was selling off because of troop movements, not necessarily the after effect here. To make a long story short, my line in the sand for being bullish Bitcoin, even though that on a technical basis I should be short right now. Well, I am short right now, but on a technical basis, I have shorts on, right? I'm a day trader, but my long-term HODL account is still being held. I'm not going to sell out based on this information alone. Now, if it escalates, continues to get worse, then I'll revisit this scenario. You know what I mean? Obviously, I'm not going to just leave I don't ever really touch that anyway, but I'm looking to potentially add on this correction as long as Bitcoin can maintain price action pretty close to June's open here. We go look at the daily. We did lose the 50 yesterday and the daily 21 exponential. This is basically for any new people here today, anybody that's new, haven't been following me for any amount of time. This is where I switch my daily bias from bullish to bearish. But I have to be careful when we're in a range, which we are. Whenever I do that in a trending scenario, I can take profits on any longs that I had, and I can start looking for day trade scalps lower for a further correction or a deeper correction. But when we're in an obvious, clear range, sorry, I was looking at something. When you're in an obvious, clear range like this, these moving averages will not help you. Okay? They just won't. They just will not help you because price is going to chop in and around. I mean, if you just look at last week or the last 2 weeks, look right here how many days. There were 10 days in a row right here that we tested this 21 exponential. Then we took off. And this looked really good. But in order for us to keep this, I didn't want to see us lose this midpoint. And clearly we lost that yesterday. And then the market opened up and sold off even harder. So like, I knew something was going on, but at that time I was looking at the news. There wasn't anything other than troop movements. We discussed yesterday in the Discord about the fact that we knew that they were talking about Israel or America potentially looking to attack nuclear enrichment sites. And that's pretty much all they're looking to do, guys. I mean, they're not looking to go into a full-blown war against Iran. They just don't want Iran making a bomb, because when the guy that runs your country continuously says death to America and death to Israel, they don't want you to have a nuke. And I don't blame them, right? But Iran wants a nuke. So that's kind of what's going on. It's a hot button topic. I'm not for Iran having a nuke or against it. I don't care. You know what I mean? I could care less. It doesn't affect my life. So, but we did have some selling off this week due to that, because we had a good inflation print coming from the CPI. We had a good PPI number as well. And then today we got Michigan consumer sentiment. Let me pull that up. Right here, we got Michigan consumer sentiment. And it's all good. It's all really good, right? It's all good. 63.7 versus an expected 59.4 from a previous 58. That's good. The 58.4, we were expecting a 49.0. Previous was 47.9. That's good. Like, these are real good numbers. It's not just good, it's like real good. Damn it. Every time I pop that back up in that monitor in that window, it always pulls this up. So anyways, what I'm trying to say is don't get super uber bearish on this news. Now, if you get further escalations, like, you know, we start landing on the beach type of stuff, then maybe we get bared up. But right now, I'm not really seeing it. And those yen futures are really, really, I mean, the yen should be selling. If you're trading any Forex pairs, USD versus yen, Aussie versus yen, Euro versus yen, or pound versus yen, or CAD yen, all of those should be getting crushed right now. And none of them are. In fact, they're doing the opposite. Why would they be doing the opposite? Well, everybody is short. Everybody is looking for that yen to be strong today. And look at this daily on Bitcoin. Like, this doesn't look bad. And we're right there. I mean, literally right there. So now we are negative on the week. It was, I mean, we made fresh weekly lows last night. We didn't take out last week's low, but for this week's range, we made fresh weekly lows last night because we opened on Monday and basically just took off. Saturday, Sunday, Monday. So here's your weekly open. This was your weekly low at 105,441. So we've done more than take out the weekly low. So if you don't want to get too bullish because you're under this week's low, I can understand that. But just keep in mind, you're bullish on the month and you're bullish on the year. So the yearly trend is still going to overtake what's happening on the very near term. Now, I started getting bearish earlier on in the week because I decided to not let my bias destroy a perfectly good short trade just because I have a bullish bias. I need to be able to locate a good short when I see one. And we did get that. We got that just the other day right here. Right here. This was absolutely beautiful. You can see that was an old 4-hour resistance here. This is what we would call a 4-hour supply zone. Well, old supply. It came in, tested it here. You didn't get a bounce. You closed under. And then the next day, all through the night here, nothing really happened. The next day, you had two back-to-back. This is your 8 o'clock candle, your noon candle. So pretty much for 8 hours, the whole New York session, going into the Asian session for Thursday, Bitcoin looked like it was going to be bullish for the majority of the day. And then right at the end of the day, it rolled back under this point right here and never went back. So this is when I started to say, okay, I don't like it. I don't like it. Like, maybe we're going to go down a little bit lower. And that's the reason right there. Resistance. And it held. It held on this close. So this candle's closure was going to be more important, especially when we were trading well above the highs. Now, obviously, a close up here changes my whole entire aspect on it. At that point, on this candle, what I would be attempting to do is looking for a support test. Let me see if I can. Okay, there it is. Yeah, so like this, right? If we close up here above the previous 4-hour candle's high, we're closing up in the 108, 140 area. Then on the next candle open, I'm looking for a midpoint or a support test to see if that area holds. If it does, then I can be a buyer. But that's not what happened. We did not close up there. We closed bearish on the candle. And it literally happened at the end of the day. Well, I checked my internet. So this isn't bad internet. This is something's up on my computer. I should have restarted my computer before I started it. Yeah, here it is right here. So you can see all morning, all the way up until 1 o'clock, 2 o'clock, right there. Boom. 3 o'clock. And then 4 o'clock. Boom. So we lost all of this bullish momentum right here all the way for the rest of the day. So yeah, that's where we currently are right now. So that's where we currently are right now. So I'm going to keep an eye on the yen. I'm going to keep an eye on the yen just to see if it does in fact continue down, because if it does in fact continue down, then that's pretty much going to mean for me risk is back on. All right. Now, Bitcoin, on the other hand, it needs to find support and it needs to do it quick. Here's BOEM. Here's another asset that I was trading. Maybe if I redo this thing here. Let me try this real fast. All right, let me go back over to BOEM. Just bear with me. There, see, that's much better. All right, perfect. Let's trash all these lines. All right. You stay there. So this was doing real good. It was following Bitcoin and it broke out to the top of the range, took out June's high. A fresh June high was made right here. Well, we typically want to see bullish continuation from that. But anytime we close a daily above the 21, we give it a good 3-day time frame because we know traps exist. And most of those traps are going to show themselves after like the first or second day. It's not going to go 3 days of upside and then be a bear trap, usually. All right. If there's an area on the chart, like where you break out, it's a fresh breakout, which is here. It's a fresh monthly high. That is a fresh breakout. You're clearing an old high. And you closed above it too. So this would be a fresh bullish breakout. I wanted to see upside continuation. Now, this candle could have absolutely pulled back to this candle's open, but that's where I wanted to see support hold. It did not. It did not. It broke down, took out this candle's low, which signifies to us that's a trap. That's a bull trap. The bulls did not have the power to push price on higher. Essentially a trap, right? So this is when we start to get short, when we look for those short trades because of the trap. Now, unfortunately, I was unable to get a fill on BOEM because it's funny like that. I did have a limit order set and I just did not get filled. It filled like $2 worth of the position on like a $2,000 position. I don't know what was up with that. But I didn't notice it until an hour later. So I'm not going to chase price. I just exited out the $2 position and moved on. And it has been straight down ever since. But just looking at little things like this can keep you out of trouble when your overall bias is bullish, like on Bitcoin, right? This is a big gosh candle, right? A God candle, as people would call it. A big screw you, an erect up closing candle. We would expect to see upside continuation from something like that. But instead, what happened? Nothing, right? Nothing. So I was watching the low of day here. We took out the low of day, but then as soon as this candle closed, this candle opened and it started to go lower. Okay, so my plan was wrong. I was looking for a low day liquidation and then a bullish move. We did get a low day liquidation and then a close higher, but it happened right at the next day candle open. So it opens during the Asian session and starts to head lower. Now, obviously, I'm not going to buy going into that because I know I can wake up and it can be completely lower and it can also be much higher. But I would rather it go higher, me come to the desk at the New York session and then look for those bullish entries at 9:30 instead of trying to fight order flow, right? But as you are right here, as we are right now, we are in a range. We have fallen right back into June's range. This is June's low. So you've got a pretty good fib test here, right? So if we're closing dailies under the 786, then we assume it's probably coming down here to June's low. When you fib the monthly range, fib it in the direction of the candle. So like right now it's green, or it's not right now. It is currently, it would be green or white in my case, but it's currently up. But when it's under this line, it's red. But here's your low that was set. You first set a monthly high, then you set a monthly low, then a fresh monthly low. And then you traded right back to the open and broke back out to the open right here. We want to keep that right here. It breaks right back out above the open. So what's the target? Probably the high. And it was. So when you fib your monthly range, fib in the direction of the candle. If you're above it, fib it up. So when we made this bullish candle, that sets the high of the month, and we start to retrace back into the range. This is where your Fibonacci retracements come in handy. When you're watching an actual range, not a big bunch of candles that fit in a subjective square. When I say a range, that's not what I'm talking about. I see a lot of people, find ranges like that, and you can. This all is a range, but this is a big subjective range. You need to go in time to see what's going on. What's going on here? We're trading inside a May's candle. So we're inside of June's range, inside of May's range, right? So it still looks good. It doesn't look terrible. But if you're going to fib something, fib like a month or a quarter or a year. Don't fib just a random range, because you might be anchoring to a daily low. And a daily low isn't going to be as important as a weekly or monthly low. You want those big lows, the monthly lows, the weekly lows, the yearly lows, quarterly lows. We don't really care about daily lows or intraday lows when we're marking out a range. We're trying to see, is June going to advance from May's close or not? That's, as a trader, even as an intraday trader, that's all I'm ever trying to do. I look, where am I in regards to last month? Where am I in regards to this quarter, this year? And am I expecting an advance or a decline? That's why the open high lows are important. We're not just taking random data and fibbing. We want to fib exact ranges, so that way we know exactly where we are in time. Depending on how today closes will basically dictate my directional bias from here. We set this low last night at the beginning of this daily candles range. Now, I'm not expecting Bitcoin to fly and make a 2 standard deviation move of this candle. I'm not expecting that today. It's Friday, right? If it was Tuesday, that would be different. Then I could set me a bullish target back up here to 108, right? But I cannot do that today. Today's Friday. Saturday and Sunday has less volume. Markets are closed, so are trading offices, banks, and whatnot. So we're not going to look for a 2 standard deviation move today on Bitcoin. Bitcoin has already made its move. But I can tell you one thing, it's not looking like a short. This is your daily VWAP right here. This actually looks like a recovery. This looks to me like New York is fading. They are fading the news. Everybody and their brother is bearish right now. It makes sense to fade that news. But only if the news doesn't get progressively worse, because the way they're looking at it is Bitcoin has already priced in this news. Once we started seeing troop movements happen we kind of had an idea that there's something going on, right? Because Israel and the United States are pulling all of their people away from danger. So it looks like, as of right now, I mean, obviously intraday price action is chaotic, but with the news that we've gotten all week this week, as of right now, I would say Bitcoin's price is pretty much priced incorrectly. So now we just got to see, are the buyers or sellers going to show up? So let's do that. Let's go look. I'm pretty sure yesterday cleared out a lot of those sellers. Or, I mean, a lot of those early buyers. Apologies. And it did. It cleared out quite a bit. I like looking at the liquidation map myself instead of the heat map. The heat map can give you a little bit of a false reality. But these things also, please understand that you need to read what this does. A liquidation map, it provides a visual chart of liquidations or liquidation risk in the futures cryptocurrency trading market. It displays liquidations that are predicted based on previous price trends. That does not mean that those are actual orders that you're looking at. All right, it does not mean that there is literally $1.4 billion worth of liquidations that are going to occur at that price. It's a predictive model based on past price performance. But if you are going to look at something like this, you can, like what I tell all of this people that that are in the Discord, I tell them, if this red line is like all the way down here, flat on the floor, then you pretty much know that you're really close to marking in a near-term low at best. At the least, sorry, not at best, but at the least, a near-term low. Because there's a whole lot of stuff back to the upside, back on this side of the price line. This red line right here is this white line right here. That's how this chart works. It's just taking a price chart and turning it, putting the prices down here. And that this way is up, just like this way is up. And this way is down, just like that way is down. So that's all this is doing right here. And you can see right here from like 104 to 105.4, there's not much liquidity either direction on a 1-day format. If you go out to a 7-day format, you can see there's a lot less sell side over here. Look where this red line is compared to the blue line. This tells us that there's a pretty good probability that Bitcoin's price is actually going to go higher, not lower. Now, this can change. Of course, it can change. It will change. Like I said, if we land on the beaches of Iran, Normandy style, then obviously this indicator can go screw itself because people will sell. And it's when people do that fear selling, that I got to get out, that's literally when shit hits the fan, especially in these markets. So just keep an eye on June's open here on Bitcoin, and oil is also probably a good short for a couple days. Not a long. You're retesting the yearly opening range from underneath. This is a huge, huge level. Now, last night when the news broke, that would not have been an opportunistic time to look for the short because you had all the bullish momentum happening at that time. And only the market will decide how high or how low it's going to go. But over a large period of time with more candlesticks, more data, we can actually see that a lot of people started selling calls way up here, looking for it to what? To fade back down into the range. What range? Well, this is your yearly open. So it's falling back inside the yearly candle. right? You're not making a fresh yearly high. Your yearly high is way up here. It's not looking to make a fresh yearly high. It's literally just liquidate. It's not even liquidating the previous quarter's high. It's literally just like liquidating the last, couple months. Wait a minute. It should be liquidating a quarter. What is going on here? This data is whacked. What's going on here? What's wrong? Why is this quarterly high at 74.67 and then last month's? So you've already liquidated the quarters. Or Q1? No. Q1's high is up there. We're in Q2. Oh yeah, we don't go into Q3 till next month. Sorry. Dumbass. Okay, so yeah, you've just liquidated a couple months highs here. Nothing major. You got to go all the way up there to get the yearly high. And I don't think oil's going to have the strength to do that, not with drill baby drill in the White House. Also, it is what it is. Clearly, I can be wrong. Price does what price does. Nobody can predict what price will do. But all I'm saying is when you get an influx of volatility, like the VIX, for instance, when you get an influx of volatility, VIX sellers, volatility sellers they'll hammer the market hard. On the VIX, we tested about weekly res. And we've been bouncing. The VIX is an oscillator. It oscillates up and down. It's not a trending asset. So the yearly opening range doesn't really matter so much on the VIX, but clearly it is mattering right here, right now. So it is mattering right here, right now. So, I can't really get super bullish on the markets unless VIX closes back under 1930 again, because every day last week when VIX was trading above 1930, I had to be very cautious going into the next week or looking for bullish positions because the VIX was trading above the obvious resistance. But the daily close is what told us that we were looking to be bullish on Tuesday. We opened under, we tagged daily res on the VIX and rolled over. So we were good. It looked good. 3 days trying to close above 1930, unable to do it because each day that we got a new trading day, those vol sellers were rocking, jumping on it. Now, clearly these people got stopped out, right? And that's what the market does. It goes where the liquidity is. Now that it's stopped all these people out, we'll see if they come back and hammer this hard again. So today's close on the VIX will be important. If it closes back under 1967, then I would say the majority of this risk is priced in. Unless it escalates. If it gets worse, then it will need to price in that risk, and in that scenario we could then look to be bearish, but today not really. I was actually bearish on Bitcoin. I did open a short position this morning on a weekly open retest. It did not quite retest the weekly open. Let me put it back up there. We didn't quite test the weekly open, but we got close enough to it right here. So I do want a short trade this morning. Clearly, it's coming right back to that entry without getting downside continuation, and it's 1108. The big volatility has already happened, and it got reversed pretty much. So just be very careful about getting super bared up today. Obviously, if you're failing to make higher closes on an hourly or even a 30-minute basis, then, I'm not saying that this is going to hold. If you can't close above 105, 167, but this candle looks like it's going to. It's already made this area of resistance the midpoint. So it's going to make a fresh daily high right now. Not a daily high, sorry. This is your daily high. But an intra-morning swing high. So I got to close one of the... I put on a couple puts. Let me get one of those off. I keep one open because the VIX is... Give me 1 second. I got to close this one. But I leave one open because the VIX is cheap. And that's typically when you want... I put this on days ago, though. I didn't put this on today. The one I'm closing is the one I put on today. But that's neither here nor there. Because the market could still roll over, clearly, today. I'm just saying, don't get super bared up just yet. If we get more escalation and more buying and stuff like that, then we need to be a little bit more proactive. But if you're ever looking to manage your upside, that's when you need to do it, when the VIX is cheap, not when the VIX is expensive. Because the VIX is determining the price of the premium that you're paying on those options. You naturally don't want to be buying the VIX when you're elevated above. Usually I say 15, but we haven't even been back under 15 since we had April, right? We haven't made it back under 15 yet. But generally, if you're under 20, closer to 15 is when you want to just buy those long dated puts with an amount of money you can afford to lose, because when you're buying the put, you're buying it as insurance. You're not buying it as a trade. You're buying it purely as not resistance, but as a hedge. And 3 months goes by, you can allow the premium that you paid for that put to go to negative, to zero. You can let it expire worthless. It's okay. Because if you're already long the markets, then you should have it situated to where you don't really lose that much on the put. The put's its only purpose is to hedge against severe downside risk or severe explosions in volatility like this.
And Netanyahu via Al Jazeera says, we are trying to hit missile launches, but the goal of the operation is to deal with the ability of Iran on missile production.
Yeah.
And he does expect that Iran will attack Israel.
They already tried. They already sent 100 drones. That's what I'm talking about. Like if it escalates, then things can get worse. Don't be a pessimist, please. Be an optimist. Always be an optimist, especially if you're in the market. Now, if you want to be a pessimist, then be a pessimist on something other than an asset class that only goes up. All right? What I'm saying is, like, you can be a pessimist on stuff like this, right? You can always be short stuff like this. It only goes down. Jazz me.
And more from Israel now. From the UN envoy says, we do not know how long Operation Iran will take.
You don't want to be a pessimist always on Bitcoin. You will get wrecked. Most everybody loves Bitcoin.
Further, it says, we'll continue to act until we know that we have eliminated the threats from Iran.
You couldn't have said all that in one sentence? Come on, man. But yeah, this is something that I would be always trying to short on big spikes. Always. Because it only goes down. Always set a stop loss. This is for all you that only want to always be a pessimist. Like the ones that are always screaming about how it's over. This is going to nothing. We'll do that with something that's already pretty much almost there. Not something that's $115,000 a piece. Like, if it goes up, do not always be
Further from
pessimistic.
Netanyahu does say that he told Trump that surprise is the secret of success.
So many people buy this. So many people believe in it long term. Long term, you will have bouts of volatility. Long term, you will have these periods where it just seems like it's going down for no reason. but ultimately it gets bought back up. So like at best, you'll be able to catch a couple scalp shorts, but in a bull market like this, I'm always quick to take profits. If I'm going against the yearly and monthly trend, I'm not taking a short, setting a stop loss and hoping for the best. No, I'm taking my profits as soon as it moves in my direction. Then I'm moving my stop to break even because I know it's likely going to be stopped out because I'm counter trend. Always, if you want to be a bear, short things that always go down. That's all I'm trying to say. Like gold, we've been trying to see if gold's going to go lower for a while now, but I'm not a bear on gold. I'm just looking for people to potentially take profits, and they did. Now, this week is a complete and totally different week. It opened up right here, down here where it ended last
Further,
week. Still
concerning
up.
Netanyahu, says plans to speak to Iranian people directly, according to Bloomberg.
Dude, the Iranian people hate you. You don't need to be speaking to anybody. They're talking about days on this operation, and not like today's not the only day. So just be very careful about buying Bitcoin at the daily high, which you're at or close to. Please, if you're going to buy it, look to be a buyer down here at June's open. But don't buy it if you're slicing through it or doing this. Right? You don't want to buy this because you're going to get stopped out here. You know what I mean? Don't do that. Like, just watch it and put some time on it. Get off the 5-minute chart. Look at the 30-minute. Watch how 30-minute candles close around here. If it comes back, if you're closing 30-minute candles under, wait for a higher time frame candle closure, like a 4-hour or an 8-hour. But the 8-hour, like I said, it gave an absolute flawless, beautiful, perfect, gave you an opportunity right in here to say, okay, once you gave all this back, you could have gotten short right then and there, and then look for downside continuation. Right? When you're trending, which this is on a very near term trending, we did set the low in June and then trended away from the low. So as far as I'm concerned, as long as we're not closing 8-hour candles under the 618 retracement of June's range, this is only a pullback. So now I definitely don't want to be looking to throw on new shorts right here, especially with this reaction. Now, if this gets up in here, like say in here, around 106.5 to 107 and fails, then I can look for a short up in here, but not down in here. But here's the thing, as long as we're above June, I don't necessarily have a short bias either. So I probably won't short it now that we've pulled back all week. We had really good news all week long. Inflation news and today's news, as far as not if you live in Iran or Israel, you did not get good news today. But everywhere else in the country, Oriental world, pretty much okay. If you're in the markets, the news was good. The Michigan Consumer Sentiment reports have been really bearish lately. They were good today. Very good today. Energy Web Token, EWT/USDT. See, I don't know what that is. I will look at it for you. MEXC. You're bearish on the month, but bullish on the year. So obviously May had a big spike, and it did with a lot of cryptos. I can run down the board on cryptos and show you May spikes. Like, boom, Almost all of them had a big monthly candle in May, and it's June that's being the problem. We wanted to see bullish continuation for almost the entire month. Once the low was set, I wanted to see it, all of them just continue to go up for the rest of the month. That's not what happens all the time. But this doesn't look like anything worse than a normal pullback. Now, here's the thing. For me, on EW, can I even trade that? I bet I can't. And it's almost a perfect short. No, I cannot trade this on weeks. Damn it. Seems like all the good setups are the ones that I can't trade. I don't even know. This is on MEXC, so I don't know why it's not on weeks. But yeah, I would probably be willing to short this as long as it doesn't close, which I mean, you got 39 minutes left on this 8-hour close. If it closes under one spot 57, I still like it lower. You're under June's open. As long as you're under June's open, I mean, technically it's best to wait for the daily to close under, and then the next day, if you get a retest of resistance, then look for the short. But tomorrow's Saturday. Saturday and Sundays generally don't have much volume. The daily candles are going to be cut like in half. You can pull up this indicator right here. Right now, your daily ranges are huge. Around 14 cents per day. I know that doesn't sound like a lot, but it is a lot in the crypto world because you got a lot of leverage in most cases. And you can buy 1 billion of these things almost. So they do move quite a lot. So I would be very focused on today's range, today's close, actually. So here's the way I would play that. Because the 8 hour is getting ready to close, and it looks like it's doing a perfect midpoint check right now of this down move. This is a down move. I don't care about the 200 exponential moving average on the 4 hour or 8 hour time frame. I only care about that 200 on daily and weekly time frames. I think anything else is just, I don't think the market really gives a crap. This does look kind of rough right now. This would be the support zone, and you're under it. So as long as you're under that, I would probably have a downside target of 143 for an intraday scalp. But I cannot trade it, so therefore I am not. But if you can, then maybe you should be watching. Wait for this 4 hour candle to close, open a new 4 hour candle, and then pay attention to that close. If price is real heavy at 154, like let's pretend it closes right now and it closes at 150. So if price looks really heavy at 150 on the smaller time frame charts, then I wouldn't have no problems throwing on a little bit of risk to the downside on that. No problem at all. Because you've given back all of this rally. All of it. And current order flow or intraday order flow is bearish. It doesn't show that on the volume profile though. Yeah, it actually shows big spike in volume down here at 149. So I would be I don't even know if I would trade it, to be honest with you, with this look. Big spike volume. Whenever there's this big of a spike of volume for me, that tells me I have to be very, very, very cautious. I don't know if that's mostly buying or selling. There's no way to tell. If it's mostly selling, then price will be heavy on the 5-minute chart. You see how it's doing this? It's not making like any significant higher closes. Notice how when you get expansion, so like for 20 minutes, this thing basically traded at 150 to 151 for like a half an hour. Well, that looks heavy, right? It looks heavy. Then it broke out. This has very little liquidity in it also. So if you have a big position size, I would not trade it. If you have a very small account and you're trading with just a couple bucks, that's different. But for you that's got big money, I would not trade this. But if price continues to be heavy over in here for like the next hour and a half or two, yeah, I'd probably fade this move. But if you start making clear and obvious higher closes, then it's not heavy. And it looks like the buyers have regained control of the daily range. On whatever this is. It did have a very nice spike in May, though. But like Bohm and everything else, it hasn't, like Ethereum hasn't given back its May spike yet. Neither is Bitcoin. Well, almost, but it's back to bullish on the day. Briefly. The daily 21 exponential moving average comes in on Bitcoin around 106.3. So there's going to potentially be a little bit of problem. 106.150 up there. Nick caught this at the lows last night. I wonder if he's still in that. You did a video a few months ago with a trader's bias, things like unit bias and gambler's fallacy. It was a video, maybe 8 things traders often struggle with. I can't find it. How can I find it? Oh, let's go look. I'm looking in here. I'm pretty sure I wrote in the in this that it had something to do with trading psychology. Because I'm not very, like, I usually don't go into very big depth on my titles. I generally just tell you what I'm thinking at that point. Where is it? We're downside next week's trades. The best way to analyze trend. Inflation fears, get ready, analyzing what to do. Yeah, I don't know. It's so weird. So very weird. If I find it, I'll post it on my Twitter. It had biases. So just like how to pick the bias. Yeah, I don't know what happened to that either. Let me see if I posted that up here. No. Analyzing trend right here.
With Geico, we can easily bundle home and car insurance and save even more.
Yeah, try that breakfast burrito.
There isn't too much hot sauce.
All right, what's up, traders? Welcome back to the channel. So in this video, I'm going to break it down for you as simple as possible, so that way you this isn't the video on basically what you need to do when you're trying. Here, I'll give you this one. This one just tells you how to analyze trend. That's what a bias is. And I would like to find that other one though, because I know exactly the one you're talking about. It was, yeah, there were eight different mental psychologies that people struggle with when it comes to trading. It would be in this area right here because I only do a video about every week. So you're in the right area. All right. Yeah, the psychology one. I thought I wrote on the video or in the title that it had trader psychology in it. Like the last half of the video is nothing but trader psychology. The first half is just an analysis in the right here. All right, what's up, traders? Welcome back to the channel. Trading Brain. Market psychology. I should have probably put that in the title, huh? Well, I'll fix that. I just wrote Trading Brain. Yeah, I don't put much creativity into my channel. There you go. Hopefully that helps. Thanks, Tom. Tom told me right there. Good job. Thank you. Nah, there it is. We got it. Tom's got it. Tom had enough. Tom was like, all right, it's right here. All right. So anyway, yeah, that's what we're going to keep an eye on. We're going to see what Bitcoin can do down here for the rest of the day. Risk markets are also regaining some of that. I mean, you just made fresh high of days on S&P. Well, not fresh high of day, but you just took out the pre-market highs. You did make a fresh high of day on cash market right there. So, but on the, obviously you got to get all the way back up here in order to take out the futures daily high. But this looks pretty damn good. I mean, you filled the gap, rolled over, set the day low, and now you're, setting a fresh daily high on the cash market. That's typically what we would call a bullish signal. But it could trade sideways for the rest of the day because it's Friday. But it does not, I mean, this does not look like the market participants are panic selling. That's all I was trying to say. Because most everything on YouTube is bearish, 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 bearish. And I want the people that follow me and listen to my videos to know, nah, not yet. Not yet, anyway. This is not panic selling. We don't start to look to be a heavy seller until we see actual panic selling taking place. And panic selling is when you get those daily ranges that just are huge. You're not even red on the day in the cash market. Let's go over here and look at. So Apple, I got a downside target on Apple of 193.25. If it can liquidate that and then get back into this May's range, because that's your May low, there's your May high. So you're still in May's range here. If you liquidate 193.25 and get back into May's range, then I might have a bullish bias on Apple. Nvidia is pulling back away from resistance. May's high. And daily res is right above it. So I would be careful being a buyer on Nvidia today. I would like to see a little bit deeper of a correction on Nvidia, maybe 139-ish. That's about mid-range. June's open. I mean, this does not look like panic selling at all. And we made fresh all-time highs on Microsoft yesterday. We've been making fresh all-time highs on Microsoft all week. This isn't panic selling. The market had a better reaction to troop movements than it did to the actual physical bombing. That's insane. But the markets are not very bearish right now, and especially Bitcoin. Thanks, Tom. Let me see here. I thought I saw another ticker. No other tickers. All right. Sweet. This will be an easy video. We can wrap it up here in a second. If you guys got any questions about anything that you want me to look at in specific, drop it in the chat and I'll take a look at it. I have no problem analyzing other charts. Like Solana, we just nuked June's low. And look how it flew right back up into that range. Not very bearish. I mean, it's not. Let's see here. Where is the open? You are still bearish. But you just made a fresh monthly low. That's typically not a good thing after making a fresh monthly high, but we'll see. If it can hold the lows of June, the original lows, then we maybe want to be a buyer of Solana. We'll give it a minute. Because when Solana lost most of its gains at the beginning of the year, it hasn't really recovered so great. So this tells me like it's not nearly as strong as Bitcoin is. I just want to be very, very cautious because there's always a reason for that. And the yen futures still are not doing anything at all today. At all. Yeah, that's very weird. That just tells me like I want to hold off on being super bearish right now. I mean, the dollar is nice and weak. The dollar's trending in the direction we wanted it to trend. It's going in the right direction. We're probably going to get a rate cut soon. Rate cut's going to be good. They might actually get rid of Powell and put Bessent in there. He will be very, very quick to drop a point because he's a Trump guy. And Trump wants interest rates down a full point, not just a quarter of a point, which Powell is looking to do maybe in September. Let's go look and see if they've changed it. I don't know if they will. Yeah, they're not looking to do anything next week. Next week, June the 18th. That is going to be Wednesday. Nothing is planned for Wednesday. Nothing really planned. It's September. Yeah, September we have a 56% chance. So there's a much higher chance as of right now that we'll see a 25 basis point rate cut. So maybe June, July, August, the markets will start to price that in. Maybe. Markets are never going to be like a full-on prediction. I still see it all the time in other people's chats. People wanting exact ups or exact downs. It's like, that's not how it works. Markets work in terms of probabilities, not right and wrongs. Probabilities. So we just made a fresh daily high on Bitcoin. Look at this. Fresh daily high. That means anybody that shorted last night at the open has been stopped out. So if it is going to roll over, it should do it now, right? If it is going to, it should do it now. Because it's got a long way to go to get yesterday's high. I don't really see it doing that. Not if it's going to be weak for the rest of the day. I don't necessarily think it will be weak for the rest of the day. I'm just saying, if it is going to be weak for the rest of the day. Because once again, I mean, we did take out June's open here, but We spent a lot of time trading above it, and now we're getting upside continuation. This is typically a good sign. Not a bad sign. A lot of people try to short this, and they just keep trying to short it, and it's not going in their direction, and they get mad, and they lose a lot of money, and they wonder why. It's because the market's literally telling them that it's going the opposite direction. It's not going down right now. It's going up. But obviously, you can't wait for it to be at the daily lows to look for the short either. So I understand why people would want to take a short there. You are retesting the daily 21 exponential moving average as well. Not quite retesting it, but close enough. 106, 150. That's right in this area. These three little wicks right here, that was retesting the daily 21 exponential. So that's about where that is. I can assume some people will look to short that, because some people think that Bitcoin's going to zero. I think they're a little bit early on that sentiment. I don't think you have to worry about Bitcoin taking a huge dump until quantum computing becomes closer and closer as to actually being a thing. I mean, they are working on quantum computing, and they probably will. These are the smartest people on the planet. They probably will crack it at some point. Then Bitcoin will be in trouble. Thank you so much, Madge, for the super chat. I really appreciate you. I appreciate you so much. Thank you. All right. What do you mean you don't deserve me? Sure. I don't have nothing else to do. I'm good. I appreciate you too. But I'm good. My day's done at this point. Most of the time around this time. Sometimes I'll get up a little bit later than this, but most of the time it's about in here. I'm done for the day. Because I know that the New York session is the last part of the big volume for the daily range. And if price is trending away from that volume spike, then chances are the rest of the day is just going to slowly drift. Either in that direction or sideways from that direction. Because that's how daily candles are built. If you look at a bar chart, sometimes it'll help you a little bit better. I like candles preferably because that's just me. But you can absolutely look at a bar chart and you can just see it. Like how the candles are made. It's just so much more clear. So if you set a low of day early in the stock market open like 9:30 in the morning, and then you spend the next 2 hours trading away from the low, I mean, if some bad news comes out during the day, then yeah, it might roll back over and head back lower. But if you're back to bullish on the day, then I'd say the majority of the shorts got smoked. Just look at the candles, how they form. Open, set a high, then you got expansion down and then closed. This candle open, retested this day's open. That's where it failed, expanded lower and closed. This day opened, same spot, traded higher. Not quite to the previous candle's low even. But ultimately, set a high, expanded, closed off the lows. Today will probably close as a doji or on highs. I seriously do not think this little bar is going to be all the way back down here. It could, but I don't think that's the highest probability right now. So the chances are is Bitcoin closes above the open or right around the open or up in here somewhere. And then we'll have Saturday and Sunday, which will be very, very boring. But if it progresses over there in Iran over the weekend, then watch Sunday real close all day. Watch Bitcoin's price action all day. Because if there's real bad news going on, Bitcoin will probably start selling off around noon on Sunday. to basically, get that futures or the Asian session open on futures to get that kicked off for the beginning of next week. So if you're in a short position from June's open and you're still sitting in it, praying that it comes back to you, you're not looking real good right now. I mean, that position isn't looking real good right now. I would close it, is what I'm trying to say. I would close it. That's just me, though. All right, if there's no other questions, I really appreciate the super chat. We'll go ahead and wrap this baby up. LARPs sell half your knowledge for so much more attention and money. You are a king. I appreciate that. Most of those people are just trying to generate secondary income. I don't hate their guts. It is what it is. But you're right. Most of the people that are selling info do not even know what they're selling. They're not professional traders. I can promise you that. If 90% of all traders fail, which the stats have gotten a little bit better over the years, in the last 4 years, I think the stats have moved closer to around 70% of traders are failing. So if 70% on average, that means 70% of the YouTube channels are failing traders. 70% of the people you follow on Twitter are losing traders. That stat carries over. It carries over to each and every single social media platform. It's very hard to find the ones that are real. Most everybody, I even have a premium service. The premium service has been winding down over the years. So once it's over, it's over. I'm never going to do it again. I will politely bow out of the premium services. But as long as people are still wanting to be there, then of course it'll stay open. But it's just a Discord. It's not much. It's a cup of coffee a day. But I'm not selling it. I'm not out here promoting it and trying to get your email and bombarding you with emails and yada, 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 like everybody else. USDCHF. Yeah, that's a good one to watch. I keep that on watch. That's CAD. Where's Swissy? Right there. So we have a very weak dollar right now. So inherently the dollar weakness is going to put a little bit of selling pressure on these, because lower interest rates is typically bearish for dollar. Higher interest rates is typically bullish for dollar. Not always, but typically. And we know that the Fed is looking to cut interest rates. We are in a rate cutting cycle. We are not in a rate hiking cycle. So we typically want to have a broader bearish bias on the dollar. With that being said, we have to keep a very keen eye on where we are in the trend. As of right now, you can see you've been trending lower all year long. Now, can the dollar continue to trend lower? Absolutely it can. But you got one real big monthly expansion right here. Yeah, Aussie yen just going up. Just going up. So we got a big monthly expansion right here. I wouldn't expect another monthly expansion this big. But smaller ranges like this, you can expect. So right now, it does look like it is trying to liquidate April's low. So that's one area I would definitely mark on your chart, and just mark it with April's low over here to the right. Get it out of your face. It's just a name tag. So that way, when you're looking at it on an hourly time frame, you know what that is. If I checked out. No, I looked at it briefly, but I'll look at it for you. Just let me get this for them. So we're setting a fresh monthly low. We just set a fresh monthly low for the month of June on this asset. So right now is not the best time to look for a short unless it rejects here. So if it rejects here at June's open, then we can look for a short. Now, A rejection, it just simply means price has a hard time trading above this level. That doesn't mean watch like a 1 hour close or something like that. You know when the best times to look for trades are. The London session, the Asian session, New York session. New York session is from 8 to 10, right? 8 to 11. That's generally when I'm looking for trade entries. So if we're trading around the June open at like a random Tuesday or Wednesday, and price is, chopping on an hourly basis or something like that, then I will typically wait for a fresh high of day liquidation or a pretty big, or, a clear rejection. So this is the level that I would want to put on risk. Down here, nothing yet, right? Because we just did this yesterday and this is today. This is yesterday, this is today. So we really don't have any objective levels to watch here. So we can get a pretty good idea on at least the yearly fib, which we know we're fixing to make a fresh yearly low, or we are currently rejecting at that fresh yearly low. So there's no point in fibbing the entire yearly range. We know this is the yearly low. It's April's low. It's also the yearly low. Big low. So at some point, I do expect that to get taken out. It just might not happen today. So you got your 50% retracement of June and the 618 retracement. So you have three pretty good levels to watch right in here. So if you start to see failures of daily closes to be back above 81,706, I think you would be safe in looking for a potential short at that level. Just make sure you're seeing heavy price action around that level. So right here is a perfect example of what heavy price action looks like at that level. Look at this. There's your breakdown. There's one 30-minute close above. That marks that 30-minute close would be marking your resistance. A London session opens in 1 more hour, 2 more hours. So let's go 1. Okay, boom. Right here. 1 more. Okay, this looks like a failure, right? So I would mark that as, I would just short it right there. Stop up here, set your take profit down there. That is failing. You're right at the London session open. So this is typically what we would do, right? And then you just play it out. And there you go. You won a trade. Okay, now that is cherry picked, obviously, but I'm just wanting to show you the example of what I mean when you see price rejecting. This is clearly price rejecting. And the best part about it is this is that day's open right here. Right here is your daily open. So it would have been hard to short it down here, right? Because you're real close to the daily lows. But look where the daily low ended up being. Right here. So there was money to make there, even though it looked like you were shorting the low of day. You were rejecting at an obvious objective level. That's all I do right there. That's it. I do that day in, day out, week in, week out. I win some, I lose some, but my losses are always small and my winners exceed those losses. That's the difference between a profitable trader and a losing trader. It's not always going to be this pretty, though. I can promise you that. That was a very much cherry-picked example. Usually you're going to see crap like this and your level's going to be smack in the middle of it. You know what I mean? But you eventually will get a good indicator. Your 30-minute candles closes. Are you closing the last three? Like they're closing lower. You get one up close. Was it higher than this close? No, it wasn't. It was lower. Okay, well, It's probably going lower, right? Lower highs and lower lows. All the cliched things to say in trading, they are cliched because they work. People try to get too, like, they make it too complicated. You're literally just looking for the best place to put risk in the market. You don't know, and no matter how good of an analyst you are, you're never going to be able to predict 1 second into the future what price is going to do. All we can do is analyze the ranges and the candlesticks. Is order flow bullish? Well, you probably don't want to be a short in that scenario until the shorts at least show up. Have they shown up here? Yep, they have. So would I short this right now? No, I wouldn't. But at 9 or 9:30, I would. Right here's your 9:30 candle. That's your open. So at 9:30, you could have literally marked the open of this candle, shorted it, turned the stop up there, and as of right now, you'd be winning. I don't know if you will continue to win, but as of right now, you are winning. That's it. Simple as that. But I do expect it probably eventually to make a fresh yearly low. I mean, the trend is bearish. It is down. You can simply put on some moving averages if you want to help you identify that order flow. Because looking at stuff when it's doing this, moving averages will not help. But once the trend breaks out and starts, they typically will start to help. Right? Look at this right in here. The fact that you had this moving average coming in here right at the perfect time at an objective level, you're already started that breakdown. If you're going to catch a trend, right here would have been a good spot to try to catch it. And you know that you're looking for a downside move because your moving averages are above price. Price is bearish on the year, price is bearish on the month. So your direction is clearly down. And it still is, and it still can be. This thing could take off to the downside here in a little while. I don't know that it will, though, with all the risk in the market today. But yeah. Most traders must lose. I'm just taking 4 to 7 trades a year. Oh, you're doing it the right way. The less you trade, the better off you will be. I promise you that. Especially since you're operating on a much larger time frame. The best 3 weeks of the year usually come in succession of one another. Like the entire yearly range could be made literally in like 4 or 5 weeks. So you can try to catch every single daily swing high and swing low. You're not going to do nearly as good as if you're only in the market from the time you get expansion until the time expansion stops. Expansion is trend. That's what I mean by expansion. We just had a pretty decent expansion on this yesterday. So today you're likely to trade sideways and choppy. Right? This was a nice expansion, and then sideways and choppy. Expansion, maybe Monday it opens up in the air and takes off to the downside. So maybe Monday would be a good time to look for a short on this. Maybe today is. I don't know. But I wouldn't have a crazy profit target either. But yeah, most of the time you're sideways in a lot of markets, especially in Forex. Let's go look at Ethereum. Ethereum looks okay to me. That's going to be the new May high. March open, April, May, and then June way up here. You're above June's open. You're way above May's open, so it still looks really good. If you take out these lows down here and get downside continuation, then then I would probably be a little bit worried about Ethereum. I never like to see breakouts like this and then instant rejections. Now, with that being said, they can still go up, and this does happen in bull markets quite often. So even though it looks really bad, it still could catch support and go, because this thing could be. Iran could come out today and say, we don't want no more drama. Please leave us alone. We're not going to build a bomb. And then everything changes, right? And the markets go right back to risk on. And we're not seeing anything in the marketplace today to tell us that it isn't risk on, because the yen is going up. I mean, it's going down, sorry. It's going up against Aussie. It's going up against dollar. It's going up. It's not going down. It should be going down. I was actually watching this for a short because it meets my trending criteria. I used the RSI to tell me when something's bullish or bearish. Well, it broke down back to bearish momentum, but this could be a trap, so I have to be careful. But as long as it's unable to close a daily back above this, which is your last highest closing daily candle, that will be daily resistance. And then I can narrow that down into an intraday time frame here. Today's close will be important for me. If it fails to close back above the 21 exponential, then going into next week, Monday, I will have a bearish bias on USD JPY. But only because it looks like it's trying to break down. Look where the May open is, look where the June open is. So that tells you right there it was sideways for the majority of the month. Here's your May open. You did get an expansion, but then it fell right back into the range. So this is a sideways choppy environment. So a trending trade might get stopped out, right? We know that because it is sideways. It is not trending yet. It looks like it's trying to. So USD JPY will be on my watch list for the next 2 to 3 days. And I know my direction is down. My bias is down. As long as we're under the 21, as long as we're under the 50 on the daily closing basis, my bias is down. So this might also be something to watch. Might actually be better to watch because your yearly lows on this, there's a lot much further to go. 139. Whereas on USD Swiss franc, you're already almost there. So you've kind of already missed the trending move on USD Swissy, whereas we have not missed anything here. It is still sideways. Bitcoin dumping? No, it's not. It just closed a fresh 4-hour candle up. Look. We just opened a fresh 4-hour candle. It's not dumping. Now, if this thing comes down here, then you can say it's dumping. But as long as it's up here around the last, it's 12:02. Bitcoin closes its 4-hour candles at 12, 4, and 8. 12, 4, and 8. 12, 4, and 8. 12, 4, and 8. Every day. 12, 4, and 8. 12, 4, and 8. Doesn't matter, AM or PM. It closes 6 of them bad boys every day. 12, 4, and 8. You just opened a brand new 4-hour candle. This is not dumping. You could test this candle's open and you still would not be dumping. But you are red on the day. To be fair. That's your daily open right there. You've already expanded lower on the day. What is our average standard deviation right now? Right? This indicator right here is called the ATR, the average true range. So what is our average true range on daily or 4-hour candles on Bitcoin? Because if you take a trade now, if you get short now, what you're telling me is you think Bitcoin is going to close this 4-hour candle lower than it opened. That's what you're telling me. Right now we have an $1,100 move on Bitcoin. $1,100. That is a standard deviation for a 4-hour candle. So we can pretty much say we know that Bitcoin is either going to go, where's the open? I forgot to look. So we want to go to 1066. Right there. And then we'll just clone this bad boy. Right? And we'll move it down. Like this. It's close enough, right? It's not perfect, but it's close enough. So this is where Bitcoin could go in this next 4-hour period. It could go to 1066 or 1043. Now, it doesn't mean it will go to those prices, but the highest probability states that it can go to either of those two prices. Does that make sense? So you need to set a trading plan to either get long here and target 1066 or get short here and target 1043. Any more than that, you're looking for a bigger expansion than has already happened for the day. So the whole reason why I won't trade this is because if we go look at the daily standard move, we're at 2,900. So if we go from the open at 105.8, 104.8, and then 103.8 would be $2,000. So we've already moved today. Bitcoin has already moved $2,000. It's moved more than that. The open is 105.7. The low is 102.7. That's a $3,000 move. We have a $2,800 move possible. It's already moved $3,000. The chances of Bitcoin moving up $3,000 today from where it is right now are so low, I wouldn't bet on that with your money. I would not bet on that with your money. Even if you gave me $1,000 and said, here, put the trade on Bitcoin right this second, I wouldn't. Because it's already made its move, according to this. Now, it is possible to get a 2 standard deviation move. I'm not saying that it isn't possible. I'm just saying the probabilities tell me that it's already made its move for the day. So that any money that was going to be made in Bitcoin as a trade today has already been made. If you try to get in now, you're just going to be fighting intraday chop slop. The probabilities are against you winning any trade now because Bitcoin has already done its standard deviation, 1 standard deviation move. It could do another of that. We do see sometimes where it just takes off, right? But the probabilities are very low of that happening. So yeah. Be very careful if you're taking a trade right now, up or down. But Ethereum still looks pretty good. I mean, I wouldn't be taking a trade on it today. I want to watch Ethereum to see if it can hold support, because you're also retesting the 200 exponential. This red line's a 200 simple. This is purple line's 200x. Your 200 exponential puts more weight on the near-term price. That's why you got this big fluctuation right here where it curves into this price action. Exponentials put more weight on the near-term price action and less weight on the longer term. Whereas your simple puts the same equal weight across all 200 candles. So that's why it's up higher. But if it can hold this, which it has been, but it's been chopping in this for a long time, I want to see it move this, leave this area. I don't care if it leaves it to the upside or to the downside. But if it starts to break down, I will be targeting a move to leave to the downside. If it holds support here at a higher close today, then I could still say that on the very near term, it does look like support is holding, and then we could target a move to the upside. And that move would have to come next week or the week after for me to like it higher from here. It needs to start moving pretty damn soon because we've already been chopping here. Your 200 weekly is also here. This is actually a really good place to be a buyer on Ethereum, probably. As long as you're not buying with a lot of leverage. I don't see any reason why you can't buy it right where it is right now. Just make sure you're not buying it with all of your money and your savings with leverage. If you just want to buy one coin or a half a coin or a third of a coin or something like that right now, I'd say you're in a good spot. You're testing the weekly 200 simple. So if it is going to go up, it should do it from here. It went up from here. It didn't stay up, but ultimately it did get a rapid expansion away from the 200 in the up direction. It also did it here. Not so much here. Small expansion. But you're testing it now. So, yeah. I mean, if you just want to buy a little bit, $10 worth, $20 worth, do it now and check back in like 5 weeks, 6 weeks, see if it did get an expansion up. We could actually look at the volatility. We don't have to look at the volatility. I can see that it's going to be low because it's been trading literally sideways for 6 weeks, right? So volatility should be low. There we go. No, it's actually high. All right, let's go to the daily. Daily is where it's at. Yeah, volatility is starting to expand. So yeah, this could be your first initial move, and it's higher as long as you don't take these lows out right here. Because this was a bear trap, and then it expanded higher. So this could be like, I'm not a wave counter, but like wave 1, wave 2, 3, 4 maybe. You see what I'm saying? Like, as long as this low remains intact, I like Ethereum higher. And this is not a directional bias indicator. This is a volatility indicator. So you can see that it started to go up as the candles started to get some movement here. You're still up on the daily on this too. So yeah, I mean, today's close will be important for Ethereum, I think. It does look like it's trying to break out. Now remember, if we lose this range to the downside, if we make a fresh low, then I would be looking for an expansion lower, not higher. So it's kind of hard, but as long as you just look at your EMA and your RSI, both of those tell you that as of right now, you can still be a cautious buyer. Very cautious. If you want to wait a day or 2 or 3, you can, because this indicator is telling you it's right now is not the time to put, pedal to the metal yet, unless you want to. But it does look good. It looks better than it doesn't. Like, it doesn't look, if I were going to bet on it going up, I would say up is the direction. Long ETH 2536. Not bad. Not bad. I took the long at 25, little money. That's the best way to do it. It's so much easier to manage your position size when you're trading with a small position size. So much easier to manage your money. Instead of losing big chunks of money, you lose little chunks of money when you're wrong. You're not always going to be wrong, but you're going to be wrong about half the time. Knowing that, you should automatically know, well, I can't go into this gambling everything that I own, otherwise I'm going to lose it. You only need to be right 1 or 2 times and be right really good on those 1 or 2 times a year to make your whole bag every year. The majority of my money does not come from my day trade scalps. The majority of my money comes from when I catch those trends, right? When I get in a trade and the trade works out for like an entire quarter, that's when I make the majority of my money because I'm still in it with a smaller position size, but still in it. That's when you make the biggest chunks of your change. I usually go to Euro because it had 2 quarters there back to back, Q4 of last year and Q1 of this year, where there were massive expansions that took place. Right here. I literally caught 111 for the short on Ethereum based on Q3's close. It was that simple. Why did you short? I shorted right there. Why? Because that's where Q3 closed. It's where Q4 opened. So I shorted it there. And I caught all of that. And then I got out in Q1 of 2025 because I knew that the Fed was going to start cutting interest rates. So I said, okay, I'm going to close my short and I'm going to buy. Where did I buy? I bought right here. Why? Because it was where this quarter closed. It's where this quarter opened. So I bought it. I took profits up here. I literally caught all of that to the downside and all of that back to the upside. And I haven't entered another Euro USD trade since. I don't have to. I did good the last 2 quarters in a row. Boom, boom. Very little trading done on those 2 quarters. Now I'm not going to lie to you, I did get stopped out of the short trade twice. I tried shorting it the week before the quarter close and the week before that week. So 2 weeks I tried it. And those 2 weeks I failed. Those 2 weeks got stopped out. But this one caught it, and it caught it in a big freaking way. Look at this on a weekly. It's absolutely phenomenal. One of the best trades I've taken. That's my entry. Actually, my entry was a little bit higher, but it don't matter. I mean, 1, 2, 3, 4, 5, 6, 7, 8 weeks of downside pretty much. Catching it all the way up there to down there, that ain't freaking bad. And then catching this from here to up here, not freaking bad. That's better than most Forex traders did on Euro USD. And I did it in 4 trades. 2 of them were losers. 2 of them were good. Real good. I've been watching you for 3 years. Thank you for all the techniques you've been teaching for over the 3 years. By the way, I'm from Brazil. Welcome, man. Brazil's beautiful. Got beautiful beaches. I've never been, but I see it on TV all the time. I know there's a lot of favelas in Brazil as well. I'm a UFC fan, and a lot of good fighters come from Brazil. Nice stuff. Thanks for ETH. One more. Carvana, if you have time. I got all the time in the world. This is my job. I could do this all day, every day. Carvana. That is over here. I don't remember the ticker on it. I will when I see it. I know it's not Carvana. What is it? Oh, Carvana. That's a ticker. That is CVNA. That's a stock. Sorry. I thought it was a crypto. Yeah, the short report, there was a short report put out on this back over in here, and clearly they were wrong. The short report said that the guy that owns this company, or the guy running the company, is basically like lying. Apparently they're wrong, because it broke down just a little bit, it expanded right back up. This would be an outside candle. And then it had another outside candle to the downside, another outside candle back to the upside. So literally like just destroying traders left and right. This thing's been tough. It's been a tough trade. Monthly support held. The lowest close held on a monthly closing basis. That would have been something to watch. Maybe not the best entry to take, but definitely something to watch. You've gotten 2 months of expansion back to the upside. This liquidation, I don't know if I would have wanted to take it, because this one liquidated this one. It would have been a hard trade, even for me. I would have been struggling on that one. But I mean, what can I say? This is 163 and it's 299. This is a big mover. This thing is very volatile. It's losing a bit of momentum here. This is definitely something to keep an eye on. Because when this stock loses bullish momentum, you tend to get a little bit of downside carry through. So you lost momentum here, sideways, and then down a little bit more. So you had one leg of downside here, sideways, and then down a little bit more, sideways, up, down, and then it took off. So that was just a liquidity generation mechanism right there. What I would watch for, my honest opinion, is I would let it go down, let it keep expanding as low as it wants to go, wherever that is. All right? Wait for about a week. Let it trade sideways for about a week. Let it do something like this. All right. And then look for it to give you one more of these. And then wait for it to go sideways again, and then maybe be a buyer at the lows. Right? I don't know where that will be on the chart. I'm just saying, it's a good rule of thumb, even on a bullish stock, to let it, once it breaks down and loses steam like this, to give it at least 2 moves. So you want to at least give it 2 breakdowns. Where's that at? Oh. Nope. No. It's the text. Nope. This one. There it is. You want to give it like one of those. And then maybe look to be a buyer on that second leg. Let the second leg be pretty good and close to that. Because you can see it doing it here. All right. Oop. This tool sucks. Let's try that again. See that? Let it do that. It did it here too. Same thing. Expanded lower. Traded sideways for a bit. Expanded lower. Then it traded sideways a bit again. And then it started to go up. That doesn't mean it will do that in the future. I'm just saying I would at least wait for that. You can try to wait for it on the first time that it starts trading sideways. That sideways trading is going to you got to be able to be patient in this game, especially when you're waiting for good setups. So this is losing bullish momentum now, so I definitely don't want to be a buyer on it. I would have definitely liked to be a buyer on it if it wouldn't have went any lower than the 50, but it did. Now on the weekly, it's not very low. You still got ways to go before you're tagging that 50. But I can look back in time on this, and I can pretty much see, like, right in there, we tested the 50 on the RSI twice on a weekly time frame. We tested it right there once. Here we lost it. Here was a test of it and a hold. There you lost it. Here was a test and hold. Here was a test and hold. And here was a test and hold. So it doesn't always work, but you get my point. Wait to be a buyer on Carvana when this indicator is closer to that 50. Where is my damn pen? There it is. Wait for this to get back down here. Then you can be a buyer on this. Or do better and wait for it to get oversold. I don't know if it's going to do that in 2025, but there's no guarantee you get all the way back down here in 2025. I'm just saying that's what I would wait for. You probably won't because you made higher highs here, but I mean, this looks like bearish div. People are going to call that, they're going to call that bearish divergence because this peak is higher than this peak, but on price, this peak is higher. That's bearish divergence. When price makes higher highs, but the RSI makes lower highs. That's bearish divergence. So a lot of people are going to be selling Carvana just simply based on your diverging signal there. There's your divergence. It's not like perfect divergence, but it's divergence. It is divergent. So wait on Carvana. Give it some time to find buyers again. This RSI is such a good tool. People just do not use it for the right reason. They think because something gets oversold, that's when you want to be a seller. And in some cases, obviously, if you're in a big bear market, it isn't a place to be a buyer. Right? Because if you would have bought a 50 test here, you lost a lot of money. But, I mean, as this was during a very, very big bear market. I don't know what happened with Carvana to make it do that. It just looks like it was losing a bunch of earnings. So clearly, if they're missing on earnings and this and that, then that'll change. But as long as they're doing okay, I could wait on those tests easy. And you can set alerts on this thing too. Boop. So I will be alerted when Carvana tests that. And as long as they're doing good on earnings and the major markets aren't bearish, I can be a buyer of Carvana then. I like it then. Love it then. And I've been watching. Oh, got that. Thanks for ETH. One more Carvana. Yeah. All right. Perfect. All right. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart. And as always, happy trading, everybody.